We are officially at a state of red alert. You need to stop staring at the 5-minute charts, stop obsessing over the RSI, and stop focusing on the daily market noise. What is unfolding today, January 8th, 2026, is far more significant than a simple market correction or a routine pullback. This is not a trading opportunity for the faint of heart. We are witnessing a financial war, and as of this Thursday, we have received the primary official confirmation that the western front of this conflict is utterly collapsing. For years, the resistance has stood shouting into the void and warning the world that the spot price of silver was a fabricated lie, that the physical vaults were actually empty, and that the major banks were dangerously naked short. Back then, the warnings were mocked, labeled as conspiracy theories, and silver was dismissed as a pet rock, while people were told to stay quiet and just invest in tech stocks. But today, here in early 2026, the mocking has ceased. Today, the opposition didn't just hesitate, they completely surrendered. We have to discuss the massive shift at Bank of America. This isn't some small-scale regional lender or the opinion of a random blogger. We are talking about one of the most powerful and historically bearish financial institutions on the globe. This is the very bank that has relentlessly shorted precious metals for years and advised its high net worth clients to avoid gold and silver at all costs. They were the Death Star of the precious metals market. And this morning, the Death Star lowered its defenses and admitted total defeat. Bank of America has officially capitulated. Let's examine the specific numbers they just released in their latest report. For an entire generation, they claimed gold was overpriced at $2,000, but now their official projection for the average gold price is $4,538 per ounce. Think about that. 4,538 is more than double its previous record highs. That is a price level that signals the total breakdown of the global fiat currency system. Furthermore, they went even deeper, stating that gold should no longer be viewed as just a speculative hedge. They are now recommending that gold should make up 20% to 30% of every single investment portfolio. Consider the sheer scale of that recommendation. Historically, these institutions suggest a 0% to 5% allocation to metals. Moving from 5% to 30% isn't a minor adjustment. It is a full-blown panic move. It is a realization that the other 70% of the portfolio, the stocks and the bonds, is in grave mortal danger. But if you find that gold forecast shocking, wait until you hear what they finally admitted regarding silver. This is the real game changer. This is the smoking gun proving a massive short squeeze is now unavoidable. Bank of America analyzed the historical data, looked at the geological constraints, and finally performed the math that has been shouted about for years. They admitted that silver is a coiled spring ready to detonate. They didn't just give a modest target of $80 or $100. They stated that based on the 2011 price ratio, silver is targeting $135. But if you look at the 1980 ratio, they are projecting a price of $309 per ounce. $309 silver. Let that number sink in. The very bank that helped keep the price suppressed is now publishing research notes with a $309 price target. Why the sudden change of heart? Why, after decades of attacking the metals, have they suddenly flipped their stance? It certainly isn't because they care about your well-being or want to help you build wealth. They are doing this because they are trapped. They're analyzing the same data points, and they see a massive catastrophe approaching that can no longer be hidden from the public. They understand that the paper game, the ability to create infinite digital contracts to suppress the price, only functions as long as there is actual physical metal available in the background to fulfill delivery requests. But the physical metal has vanished. In that very same report, they quietly acknowledged the grim reality of the supply side. They admitted that global mining output is in the middle of a collapse, expecting production to drop by another 2% throughout 2026. It is not just that the mines are producing less volume, it's that the overhead costs to extract that metal are exploding. Energy, labor, and equipment costs have all surged. The all-in sustaining cost, AISC for miners, has reached such levels that at $70 silver, many operations were barely staying afloat. However, at $300 an ounce, the mining economics finally make sense. Bank of America realizes that the price has to skyrocket to encourage production, or there will eventually be zero silver available for the global industrial sector. They are pre-positioning themselves now so they can claim they predicted this when the price goes vertical. They want to be viewed as being on the right side of history when the squeeze hits, despite spending the last 10 years on the losing side of the trade. This capitulation is the green light we've been waiting for. In every major bull market cycle, there's a specific moment where the smart money stops fighting the momentum and starts desperately chasing it. That moment is today. When the most prominent bear becomes the biggest bull, there are no sellers left to hold the price down. The sellers have exited the building, and there is nothing but a vacuum of price discovery above us. While Bank of America focuses on their internal charts, they are also looking east. They see the real reason the physical market has dried up. They are watching the dragon that has finally woken up and decided to absorb every available ounce of metal on the planet. While Western banks are busy writing research reports, the Chinese government is taking massive physical action. We must discuss the liquidity bomb that just went off in Beijing. You cannot truly grasp the panic at Bank of America until you see the tidal wave coming from the People's Bank of China. While the Western press is distracted by tiny interest rate changes and unemployment statistics, Beijing has launched the largest monetary event in history. This isn't a simple stimulus or an infrastructure bill. It is a liquidity injection so immense it is warping the global economy. The data coming out of China this week is terrifying if you are a dollar holder, but it is incredibly exciting if you own silver. Reports show that China has expanded its M2 money supply by a staggering 48 trillion. To put that in perspective, that is roughly double the entire money supply of the United States. Think back to the inflation we experienced in the US after they printed about 5 or 6 trillion during the pandemic. We saw the cost of living double and housing prices explode. Now imagine a monetary explosion nearly 10 times that size hitting the Asian markets today. But here is the vital distinction. The purpose behind this money printing is different. When the US prints, the money flows into Apple, Nvidia, and financial derivatives to save the banks. The Chinese aren't doing that. They aren't printing 48 trillion to bail out real estate developers or boost their stock index. They are printing that money with a clear strategic goal: to transform devaluing paper currency into hard physical assets before the global system fails. They are performing the biggest wealth transfer ever seen. They are taking these newly created yuan and deploying them like strategic capital into world commodity markets. They are buying copper, oil, and food, but their most aggressive moves are in gold and silver. Essentially, they are telling the world they will trade the paper they just printed for the physical metal that took billions of years to create. And the West, in its arrogance, is taking that deal. The West is handing over its silver and gold in exchange for a fiat currency that is being diluted at a rate of 48 trillion per cycle. This is the black hole effect we predicted. China has become a gravity well for precious metals. This massive injection of cash means there is now an infinite buy order coming from the East. If silver hits $85, China buys. If it hits $90, they buy more. They don't care about the yuan price because they can print more yuan. They only care about the physical ounces. They know that whoever holds the most physical metal when the music stops will be the one setting the rules for the next monetary system. They are clearing the shelves, draining the vaults in London, emptying the refineries in Switzerland, and hollowing out the COMEX. This is why the premiums are currently exploding as of this week. Usually, when a nation prints this much money, their currency fails. But the yuan isn't crashing against the dollar yet because they are backing that currency with the very commodities they are buying. They are creating a resource-backed currency in real time, while the dollar remains backed by nothing but debt and military force. This 48 trillion wall of capital is what finally broke the back of the short sellers. Bank of America saw these M2 numbers and realized that no amount of paper manipulation in New York can stop a 48 trillion buying spree. If JP Morgan tries to sell 1 billion paper ounces to drop the price, China will simply print enough yuan to buy every physical ounce those contracts represent. The shorts are essentially bringing a knife to a nuclear standoff. This is why the digital spot price is becoming irrelevant. The price on your screen is set by Western trading algorithms, but the actual flow of metal is dictated by Eastern purchasing power. Right now, the East has 48 trillion reasons why they will win this battle. Every time the price dips, Chinese liquidity arrives to buy the floor, making that floor higher every day. They aren't trading for a quick dollar profit, they are trading for national survival. They see the end of the dollar system in the debt spiral, so they are leaving the burning building first and taking the gold with them. This creates a massive collision. You have the unstoppable force of Chinese demand meeting the immovable object of Western bank manipulation. However, that immovable object is actually hollow. It is built on a foundation of leverage, lies, and empty vaults. We need to look at the specific trap the Western banks have fallen into. While China is long on everything, the banks are short on everything, and their position is mathematically impossible to exit. Let's look at the 4.4 billion ounces that are about to trigger a global explosion. We have to examine the glass jaw of the Western banking cartel. There is one specific number keeping the risk managers at JP Morgan and Citi awake at night: 4.4 billion. According to the latest bank participation reports and derivative data, the total net short position of the Western banks in silver is estimated at 4.4 billion ounces. Let's put that into perspective. The entire world, every mine in Mexico, Peru, Poland, and Russia, only produces about 800 million ounces of silver per year. That is a hard physical limit. You cannot print silver ore. If you divide that 4.4 billion ounce short position by the 800 million ounce annual supply, you get 5.5. This means the banks have sold, on paper, 5.5 years worth of global production that hasn't even been mined yet. They are short 550% of the world's annual supply. In the stock market, a 20% short interest is considered huge. In the silver market, they are short 550%. This level of recklessness has no precedent in financial history. And here's the trap. They sold the silver years ago at $20.25, promising to deliver metal they don't actually own. They thought they could always crash the price to buy it back cheaper. They didn't anticipate the Chinese liquidity surge or the massive demand from the solar industry. Now, with the price screaming past $80, they are underwater by a terrifying amount. Every single dollar that silver rises costs these banks $4.4 billion in losses. If silver reaches Bank of America's target of $309, these losses become terminal. We are talking about the end of these institutions, but the financial loss isn't even the biggest threat. The threat is physical. A short position is a legal promise to deliver. In the past, they could settle in cash, but today's buyers, like China and the industrial sector, don't want cash. They need the physical bars to build panels and missiles. When they demand delivery on 4.4 billion ounces and the vaults only hold 300 million, the system hits a wall at 1,000 miles per hour. This is the margin call from hell. It will force these banks into the open market to become buyers. Imagine the chaos. The same banks that suppressed the price for decades will be forced to bid the price up just to survive. They will be scrambling to buy back 4.4 billion ounces, but no one will be selling to them. We are holding, and China is buying. The banks will be bidding against a total vacuum. They will bid $85, then $90, then $100, and find no sellers. This is how you get a vertical price move and massive gaps on the chart. This is how silver hits $309 in a matter of days, not years. There isn't enough metal in the Earth's crust to bail these banks out. They have sown the wind, and now they are reaping the whirlwind. This brings us to the most dangerous deception happening today. The banks know they are trapped, and they know the math. Their only remaining play is to trick you into surrendering your silver. They want to create a fake price on your screen that looks high enough to tempt you to sell, but in reality, it is a massive discount. They want you to see $80 and think you're rich, so you'll cash out. Don't fall for it. We need to expose the massive disconnect between the digital price and the real-world value of the metal. Currently, the market has split into two separate realities. If you don't understand the difference between the number on your app and the reality in the street, you will get wiped out. You see silver hitting $80 and people are celebrating, but stop. $80 silver is a lie. It's a trap designed to steal your metal before the real move starts. Do a reality test. Call a bullion dealer and try to buy an ounce for $80. They will tell you they have no stock at that price. The real price to hold metal is already $90 or $100. This is the decoupling. The banks are using algorithms to keep the paper price at $80 to manage their losses and fish for liquidity. If you sell at $80, you are trading a winning lottery ticket for a sandwich. You are giving away the only asset that protects you from the 48 trillion yuan devaluation. In a normal market, premiums are low. Today, they are $10 to $20 over spot. That tells you the spot price is broken. If it were real, traders would buy the paper and take delivery. The fact that they can't prove the COMEX is failing to deliver. Bank of America is talking about $309 because they know the paper charade has to end. When it does, the price won't drift. It will re-rate overnight. It will jump to $150 in one session, just like what happened in the nickel and palladium markets. My warning is clear. Do not let the green candles convince you the squeeze is over. It hasn't even begun. This is just the pre-game shakeout. The banks are hoping you're desperate enough to sell at $80, but you need to think like a central bank. China doesn't sell when the price rises. They buy more. You are holding the collateral of the New World Order and the battery of the green energy revolution. The most powerful entities on Earth are trying to take that metal from you. The $80 trap is their last weapon. Do not trade real wealth for fake currency. If you sell now, you will never be able to afford to get back in. You will look back at early January 2026 as the last day silver was under 3 digits. We have the bank surrender, the shortage, and the fake price. Now, what is the final verdict? We need the marching orders for the rest of 2026. Even if the banks had the money to cover their shorts, they've hit a supply cliff that no amount of money can fix. Global silver production is falling 2% this year while demand is exploding. This is a famine, not a deficit. Price does not create immediate supply. It takes 10 years to bring a new mine online. We are stuck with what we have, and what we have is disappearing. Grade degradation means we have to mine 3 times as much rock just to get the same amount of silver we got 20 years ago. As energy costs rise, the cost to extract silver rises with it. Furthermore, since 70% of silver is a byproduct of other mining, a recession that kills demand for copper and zinc will also kill the silver supply. It is a perfect storm of scarcity. Bank of America realized there is no cavalry coming to save them, so they switched sides to ride the rocket. For you, the individual investor, the time for analysis is over. The window is closing by the hour. As the Asian markets open, premiums are rising and stock is vanishing. Do not sell. Do not trade your sovereign wealth for dying promises. If you find any metal left, buy it. Clear the shelves. We are entering a time where silver becomes unobtainium. The target is $309. The catalyst is 48 trillion, and the guarantee is the production collapse. The Western Front has fallen, and the road to triple digits is clear. Do not blink. This is the wealth transfer we prepared for. The target is locked. Go, go, go. Don't forget to subscribe and stay ahead with the latest market updates.